macro is crude oil prices are going down. It's a bear market. It's what the Trump administration wants. And the curious part is the methods he's using. That's just entertaining to watch. And everything I see is he's going to get what he wants to get crude oil prices lower. So what I think the good news is for people who like to be bullish crude oil, which it typically doesn't go up and stay up, is I think we're getting towards the lower end of and near a low price cure stage, which means maybe around $42 a barrel if history is an example. But anything up and any bounces near 65 would hold resistance. The bottom line is, as our colleague Javier Blas has pointed out, the whole Americas, from North America down to South America, have become a price maker in crude oil and in commodities, and taking that away from, they used to be a price taker. It just, that's the way the trend is at the moment.
Okay, so we have control over our destiny. We set the price as opposed to receive it and have to contend with it. The president says Venezuela will send anywhere from 30 million to 50 million barrels of oil to the U.S., worth about $2.8 billion at current market prices. Is 50 million barrels a lot? It sounds like a lot.
Well, it's not really a lot. Let's put that in context. The U.S. and Canada combined have a net surplus of about 8 million barrels a day. And that's compared to a deficit of around 2 million barrels just 10 years ago. So it's the trend that's happening. A lot of those barrels that were going to China will not be going to China anymore. And that's the key thing. This is a lot more geopolitical now with the Trump administration asking Venezuela to push away from China and Russia and Iran. But the bottom line is crude oil in the bottom is heading lower. But it's not just crude oil. The weakest commodity so far, one of the weakest commodities so far, this is natural gas. I'll give you a headline. In about a month, you're going to be able to say natural gas, the front contract is around $2 per MMBTU. That April contract is 2.8. Just a month ago, it was 4 as we cycle down in natural gas. So it's the whole area, all the energy complex is heading that way. Where are the bottoms is the key question.
Yeah, I'm just pulling up my GLCO page, Global Commodities, and it breaks it down between energy, metals, agriculture. It's a great screen. Henry Hub, natural gas, that's been at north of $4 for like a long time. It's $3.50 right now. So it's happening, right?
Right, and that's the winter contract. That's the front contract. But the contracts, Paul, that's anticipating those tulips coming up in New York, those are the ones that are going to get hammered. So just when you report it in hopefully about 2 months from now, Mr. Trump will be delighted to hear you're going to be able to say 2 handle on natural gas versus just a month ago for that front contract, it was closer to 5. But that's the key thing is natural gas we had a colder than normal winter last year and increased that demand. But now we're realizing the trend in global warming is probably consistent.